Well, it just was hopeless, right? I mean, the operating business is hopeless and you know, okay, you know you're going to work yourself to death for a decade and do a million things right with 2,000 people, and you're going to be worse off in a decade than you are today. Okay, that's operationally hopeless, right? And then on the balance sheet, you roll the clock back to July. We had $500 million of capital in our treasury. We were holding short-dated treasury securities and generating effectively like 20 basis points of yield on it. We'd seen a K-shaped recovery. Wall Street came back with a vengeance. Main Street was flat on its back. And it was clear there's monetary inflation. So we decided that we were going to lose a large portion of the $500 million in purchasing power if we didn't do something. My forecast then was probably like 25% inflation. And you could have got there just by looking at the S&P index. So I thought, you know, 500 million minus 25%, like losing $125 million in 12 months is kind of like losing money at 2 to 3x the rate that the 2,000 people in the company were making money. You know, the thought was, well, if we're a Main Street company struggling against all the lockdowns with all the uncertainty, and we are doing it minus $500 million, yeah, it feels like a university giving up its endowment as it goes into a crisis, right? So that decapitalizing the company, it was a way to give the $500 million to shareholders. They would have put it in the S&P 500 and they would have got 34% on it if we had done that. But we would have, in essence, left ourselves defenseless without any capital. So that was one strategy. The second was invest it all. I would have bought $500 million worth of Bitcoin if I was a private company. I just would have walked out, bought all 500 million, I would have done it at whatever, $10,000 a coin. But as a public company, you got to think about your outside shareholders. And you can't, it's not like there's 10. You can't just go to the 10 of them, ask them what they want to do and get their buy-in. When you're public, you've got a shifting set of outside shareholders that are changing every minute of the day when the stock market is open. What we did is we transparently, we telegraphed that we were looking at this. Our first press release was an announcement that we were going to buy back $250 million worth of our stock over the course of 12 months. And we were going to invest $250 million of our capital in hard assets. And we said, we're looking at everything under the sun, and Bitcoin was one of the things. So my first love of the Bitcoin community was, the way that I knew I liked all the Bitcoiners was one day later, some cyber hornet, some Bitcoiner goes, MicroStrategy is considering buying Bitcoin with $250 million. Now, as Bitcoin merged in there with gold, silver, commodities, equity, property, real estate, anything you could have imagined. But the Bitcoin community immediately picked up on that. I don't know how they do that, right? They must be scanning for this. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin. We made the decision. We're not splitting it across 6 assets, right? And it's a good thing we did, right? Because Bitcoin's up 332% in 12 months. Gold is down 7%. If we'd split it 50-50, 125 million of gold, 125 million of Bitcoin, right? It would have cost us billions. If we'd gone all gold, it would have cost us many, many, many billions. We'll come back to that in a second. So we had to do something, but the question is what? So we just picked Bitcoin. We made the decision, but we thought, this is going to be jarring for some people. Stock is around 122 at the time, right? To put this in perspective, the company's $500 million revenue generator, generating cash flow, and we have more than 500 million in cash and about 10 million shares. So the company's trading at 1 times revenue plus cash. I said, well, maybe people think this is offensive. They're not going to like this, or it's too risky. How do you actually orange pill every one of your outside shareholders at the same time. Well, you can't. So the next best thing is we just offered to buy them out. So the idea is if you don't like this, we're going to buy you out. We're going to post $250 million to buy back shares at a premium. We wait 20 days. So the market trades for 20 days, and in the first week, the market's trading on 135. Like people, so they're not even quite sure about the buyout. Then after a while, they start thinking, they're like, well, if I can put it back to the company at 140, then presumably maybe it's worth more. So the stock trades up a bit past the 140. And at the end of the tender period, we have about $60 million worth of shares tendered. Everyone that didn't like the strategy had 20 days to sell into the open market. And if you sold in the open market above 140, then why wouldn't you? And if you're still holding the shares at the end of the tender period and you don't like the strategy, you sell into the tender. So the result of the Dutch auction is we had $175 million of extra capital. We thought about it. We put out another press release. Okay, this is our primary treasury reserve asset. So the first notch was, this is a treasury reserve asset. The second step is, this is the primary treasury reserve asset. Then we bought 175 million more Bitcoin. I think it was largely ignored by every other publicly traded company. I don't think there's a lot of awareness to it. When we did our due diligence checks, we found Overstock 2 or 3 years ago had a few $1 million of Bitcoin on his balance sheet. And that's it, right? We couldn't find anybody else. And so this is off the beaten path, but it seemed like so rational to me. Like, it seems so obvious. Bitcoin is digital gold. You need something that's like gold, but better than gold. You have to make a choice. It was obvious that the institutions were coming, right? I mean, you had companies like Fidelity getting into this space. It struck me as being a rational thing to do, but no other public companies had done it, and it wasn't totally clear to me why. Although at this point now it becomes clear, right, in hindsight. So we went through that. We did the 425 million. The stock traded up. Bitcoin started trading up. At that point, I started speaking in public. And at that point, we're all alone as a publicly traded company, and people aren't quite sure if we're crazy. But what happens next is some bullish things, right? I mean, I thought that when Square bought Bitcoin, that was a seminal event, right? Because one data point is a question mark, but when you had the second data point, you can draw a line. And so that was a big day. When PayPal announced support for Bitcoin and they started moving it, that was a big day. That was a data point, right? Those were the data points that moved us from 10,000 to 12,000 a coin. And at some point, some Citron research studied, discovered my stock, and Andrew left, I guess, said something positive. And the stock started trading up, and then it traded into the high 100s, and then it traded into the 200s, and Bitcoin started trading up. And when we got into the teens, people thought, oh, well, there's something interesting here. The next step in the journey was to go out and buy more Bitcoin. So we started buying more Bitcoin as part of the Treasury Reserve strategy, and that got people's attention. Then when the stock got to the 300 range, that was the highest it's been in a decade, 300. So we started thinking, well, maybe we can raise more money. And so we went back to the convert market, and we were trying to raise $400 million in a convertible debt offering, but it was extremely popular and we were oversubscribed. So we upsized the deal to $650 million. So that was a screaming home run. We started out with we're going to raise the money for general corporate purposes, and along the way, the discussion was, what are you going to do with it? And I said, well, I want to be able to buy Bitcoin with it. And they said, well, we should put that, into the disclosure. I said, yeah, we should disclose that. And then they said, well, are you sure you're going to buy it? And I said, yeah. So eventually it flipped and it became, we're doing it to buy the Bitcoin. So that became, in the history of first, right? We're the first public company to buy Bitcoin on the balance sheet. were the first public company to declare it a Treasury reserve asset. We became the first public company to do a Dutch auction, where the proceeds eventually became Bitcoin. Then the first convertible bond to buy Bitcoin. And I think that all of those things rotated the shareholder base, right? Because before we did this, we got substantially no credit for the assets. Like people were basically taking the 500 million and they're like, okay, well, that's going to be worth zero, right? Or negative. 2,000 people doing 100,000 things right every year to make $50 million and then watching the enterprise lose $100 million a year due to a political decision. So in essence, we're running as hard as we can. We're falling backwards. And the situation was literally hopeless, right? Like people wonder, where did the Bitcoinist hope come from? Well, it just was hopeless, right? I mean, the operating business is hopeless and okay, you're going to work yourself to death for a decade and do a million things right with 2,000 people, and you're going to be worse off in a decade than you are today. Okay, that's operationally hopeless, right? And then on the balance sheet, if somebody says we're not even thinking about raising interest rates, it means for the next 4 years you're going to get 0% on your money, and it's going to be worth half as much in 36 months as it is worth today. Transition for our shareholders to get long Bitcoin, right? You're either long Bitcoin or you're selling out to us at a premium, one or the other. And then from that point, Bitcoin started moving up and our stocks started moving up. And then we realized that the conservative thing to do is just stop there. And if we'd stopped there, I mean, we would be all equity, $475 million invested at $11,000 a coin or something. And that's not a bad result, right? We would have made 6x our money. But what we realized is we could borrow money at 75 basis points. And Bitcoin's up 171% a year every year for a decade, right? If you can borrow money at 1% and invest it at 171%, your arbitrage is 170% on how much? Well, how much do you want, right? Like, where are you going to stop that?